Hey, welcome to edX World and another video in the AS A-Level Accounting series. If you are new here, please subscribe to the channel, press the bell icon. I am regularly posting videos explaining the concepts and showing you some solved examples on the topics that are covered in the syllabus. So today's video is on control account reconciliation. The basics of control account were studied in the IGCSE. If you're not very clear with the basics of control accounts, I would strongly recommend to first go and watch the two videos on control accounts in the IGCSE playlist. I'll also provide the links to those videos in the description box below. Do watch them, do understand those concepts first, and then only you will be able to understand control account reconciliation. So first I'll give you a brief introduction on control accounts just to revise what we studied in IGCSE. Then I'll show you the basic format of control accounts, which I expect you to already know if you want to understand this video better. Then how does the control account work? How does it operate? And finally, we will see once the errors in the sales ledger and purchase ledger are found out, how do we prepare the updated control account and the reconciliation statement using two solved examples. Now going to the basics, control accounts are of two types, sales ledger control account and purchase ledger control account. Sales ledger control account is prepared to check the arithmetical accuracy of the sales ledger, the transactions that are recorded in the sales ledger. And you would be knowing that sales ledger will have all the debtors accounts. So basically the sales ledger control account is prepared to check the accuracy of your debtors accounts. And then you have the purchase ledger control account that is prepared to check the arithmetical accuracy of transactions recorded in the purchase ledger. In other words, the accounts of creditors. Once you prepare the control accounts, the two control accounts, you have to compare the closing balance of the sales ledger control account with the total of closing balances of all the debtors accounts in the sales ledger. If these two balances are the same, then you can conclude that there are no errors in the sales ledger or the debtors accounts. But if these two balances are not the same, they are different, then you will have to go back and find out the errors that have caused this difference. In the same way, the closing balance of the purchase ledger control account is compared with the total of closing balances of all the creditors accounts. And if they are the same, then you can conclude there are no errors in the purchase ledger accounts. If they are not the same, then you will have to look for the errors and rectify them. Some important concepts when you're preparing control accounts: contra entry or set off entry. These entries are prepared to set off common balances. If a party is a debtor and the creditor to the business at the same time, you will have to set off common balances and show the net amount payable or receivable in the books. Apart from this, you should know that debtors usually have debit balances, but they can also have credit balances brought down and carried down. Reasons could be, let's say debtors have paid in advance before goods were sold to them, or the customer has paid you the money and later on returned back the goods also. And there could be many other reasons because of which there is a credit balance in the debtors account. If the question tells you that there is a credit balance in the debtors account, you have to deal with it accordingly and bring down the balance on the credit side. In the same way, creditors account usually have credit balances, but there could be debit balances also. If given in the question, make sure you put the balances on the correct side. If you want to study these two concepts or anything about the basics of control account in detail, again, I would recommend you to please go and check the video in the IGCSE playlist or in the description box below. The format of control account, let's have a look at the format of sales ledger control account first. Obviously, the balance would be brought down on the debit side. Then any transaction that increases the customer's balance or the amount receivable from the customer will always come on the debit side. So when you sell the customer, debit side, and any transaction that decreases the amount receivable from the customer will come on the credit side. So when the customer pays you the amount due, cash or check is collected, the amount will be on the credit side. Discounts given to customer on the credit side, bad debts and sales returns also on the credit side, because these transactions decrease the amount receivable from the customer. On the other hand, if check gets dishonored, a check when received was on the credit side, but when the check gets dishonored, you'll have to again increase the balance of the customer and hence on the debit side. And when customer is charged interest, let's say for non-payment of dues on time, then again on the debit side. If the question tells you that there is a credit balance at the end of the period, credit balance in customer's account, that credit balance will appear on the debit side of the control account. And finally, you will have to balance the account to calculate the closing debit balance in the sales ledger control account. Similarly, going to the purchase ledger control account, starts with balance brought down on the credit side. If they give you that there is an opening debit balance in the purchase ledger control account, obviously that will come on the debit side. Any transaction that increases the balance payable to the creditors will come on the credit side. So we have credit purchases and interest on the credit side. When cash or check is paid to the customer, when discount is received, or when goods are returned back to the supplier, these transactions decrease the amount payable to the supplier and hence will be on the debit side. If they have given you any debit balance at the end in the creditor's account, that will appear as balance carried down on the credit side. And finally, you'll have to balance this account to find out the closing balance in the purchase ledger control account, which will appear here. Let's understand the working of control accounts. Now, you would be aware that control accounts are prepared using figures that are taken directly from the books of prime entries. You could take the figures from individual ledger accounts, but that is usually not done. It is always preferred to prepare the control accounts using the figures extracted from the books of prime entries. So here we have a set of books of prime entries that will include your day books, your cash book, and other books like petty cash book, etc. Now, transactions when they happen in the business are first recorded in these books, and after that they are posted in the individual ledger accounts. Customer's account will be in the sales ledger, creditor's account will be in the purchase ledger, and all other accounts will be in the general ledger. Posting is done, and then we need to prepare our control account. I told you control accounts you could prepare by taking numbers or figures from the ledger accounts, but that is not done. Usually we use our figures from the books of prime entries to prepare our sales ledger control account and purchase ledger control account. And then a closing balance in the control account is calculated. Both the control account individual closing balances are calculated. And on the other hand, we also have the closing balances as per the accounts of the sales ledger and purchase ledger. For example, in the sales ledger, you'll have all the debtors. You'll have to take a total of the closing balances of all the debtors accounts. Same way, closing balances of all the creditors accounts, and then the closing balance of the sales ledger control account is compared to the closing balance of the debtors accounts, and same way purchase ledger control account closing balance is compared with the closing balance of creditors account. If these balances are same, it indicates that the accounts are free from errors. Specifically, the sales ledger and the purchase ledger are free from errors. So let's go ahead and see some solved examples. We'll see two examples, one on sales ledger control account and one on the purchase ledger control account, where I'll show you how to prepare the updated control account and the reconciliation statement once the errors have been found out, the errors that have caused the differences in the closing balances. So we have a first example here. Now in this example, the sales ledger control account balance is given at $94,990 and the balances as per the accounts in the sales ledger is $97,580. These two balances are not the same, and hence it's obvious that there is some error made in the transactions recorded in the sales ledger, or in other words in the debtors accounts. Now they have found out certain differences or reasons for differences for you. These are the errors that were made in the debtors transactions, and hence there was this difference. Now what we need to do is to understand these errors and record them either in the updated sales ledger control account or in the reconciliation or in both, in such a way that we find the correct balance of the sales ledger after all the errors are rectified. Now to do that, you really need to understand the error very carefully, and you also need to have a good understanding of the working of the control account. For example, you should know that the control account is always prepared from the totals of the books of prime entries and not from the figures taken from ledger accounts. Now let's analyze each error and decide whether it should be taken in the updated control account or in the reconciliation. Sales ledger was undercasted by $400. So when you were preparing the book of prime entries, specifically the sales journal, before transferring the total to the control account, the total of the sales journal was undercasted by 400, meaning under total by 400. Obviously, this error definitely affected our control account balance. It made our control account incorrect. Next question arises, did it make any difference to our ledger account balance? Did it make any difference to the customer's account? No, it did not, because the total of the sales journal is not taken anywhere in the ledger accounts, in the sales ledger accounts. So this error will just be recorded in the updated control accounts, and hence I have CA here to show that it will be recorded in the control accounts. My next error is sales returns journal undercasted by 50. This is a similar error where the total of sales returns journal was undercasted, under total, and hence it will only affect your control account. Third is discount allowed to a customer was not posted to the customer's account. Understand the error. It says that the transaction was correctly recorded in the cash book as discount allowed. The total of the discount allowed column would have been taken, transferred to the control account. But the discount allowed was not specifically posted to a customer's account. Obviously, if it is not posted to a customer's account, the total of the discount allowed column in the cash book would not be affected, and hence control account would not be affected because of this error. But the customer's balance in the sales ledger will definitely be affected, and hence we need to record this error in the sales ledger reconciliation to correct the balance of the sales ledger. So I will write here reconciliation or reco to show that this will be later considered in the sales ledger reconciliation. The fourth error is bad debts was posted to the debit of customer account. Bad debts is actually posted to the credit of customer's account. So here there's a mistake in the sales ledger account. Obviously, this error will not affect your preparation of your control accounts. So this will not impact your updated sales ledger control account, but will be taken directly in the reconciliation. Sales invoice of $560 was completely omitted from the books. Now this entry was not recorded in the books of prime entry. Since it was not recorded in the books of prime entries, it eventually did not go into the control account. So control account is affected because of this error. And it was not even posted in the customer's account, obviously, because no entry was there in the sales journal. So the sales ledger balance is also affected because of this error. And hence this error will be recorded in the control account to correct the control account, and also recorded in the reconciliation to correct the sales ledger balance. Now let's see how can we go about first preparing our control account, updated control account, and then the sales ledger reconciliation. I will start my updated control account with the balance that was brought down earlier. With the previous balance brought down, I will start my updated control account. As per the question, balance in the control account was 94,990. So I'll start my updated control account with this balance on the debit side, 94,990. If I go through my errors, I decide to record the first, second, and the fifth one in the control account. So let's start recording our first error. Sales journal was undercasted by 400. If I have to correct this error, I'll have to increase the sales in the control account. To increase the sales, obviously, I'll have to record the sales on the debit side because sales appears on the debit side of control account. So I'll write sales as 400. In the same way, sales returns journal, if I have to correct that, I'll have to increase the sales returns in the control account. For that, I'll have to credit the control account with the undercasted amount, sales returns 50. And the fifth error, sales invoice 560 was completely omitted. I'll have to record this additional sales to correct my control account. So omitted sales invoice of 560. Once this is done, control account is updated. You need to take a revised balance carried down in the control account. That will be done by taking a total on the debit side of the control account. I get 95,950. So 95,950 on the other side, and I'll have to calculate my revised balance carried down, subtracting the 50 from the total. I'll get 95,900. Now this is my revised balance as per my sales ledger control account. Let's start preparing our sales ledger reconciliation. The reconciliation will start as per the previous balance in the sales ledger. So balance in the sales ledger, in the question it is given as 97,580. So 97,580. Why do I have a plus and minus column here? Whenever I want to increase the balance in customer's account, I will use the plus column. Whenever I want to decrease the balance in the customer's account, I'll use the minus column. First and second error we've done in the control account. Our third error has to be recorded in the reconciliation. Discount allowed to a customer was not posted to the customer's account. When I post the discount allowed to customer's account, I'll be effectively reducing the balance in customer's account. So I will be using the minus column here. So discount allowed to customer, and the amount is 230. So in the minus column, 230. Bad debts was posted to the debit side of customer's account. So in order to correct this, I'll have to credit the customer's account twice, because in a bad debts entry, customer's account is credited, but here the customer's account is debited. So the first credit to correct the incorrect debit, and the next credit to actually give the effect of the transaction. So I will record my bad debts. When I'm crediting my customer's account, the balance in the customer's account is reduced, and hence I'll have here 1,005 multiplied by 2 twice, so 2010 in the minus column. And the last one, sales entry was completely omitted from the books. So when I record the sales invoice in the customer's account, I will use the plus column because balance in customer's account will increase. Your next step is to take a total in plus and minus column. So plus column total is 560, minus column the total is 2240, and the net of plus and minus column will be taken in the last column, the amount column. If I take a difference of the minus and the plus column, what I get is 1680, which I will be subtracting from the original balance in the sales ledger. When I reduce this 1680 from the 97,580, which is the original balance in the sales ledger, what I get is 95,900. And this has to be equal to the balance as per the updated sales ledger control account. When this balance is equal to the sales ledger control account balance, it also indicates that all the errors that were originally present in the sales ledger accounts are now rectified. Here we have a second example where we will be preparing our updated purchase ledger control account and reconciliation for the purchase ledger. Again, balances as per the control account and ledger are given, which are not equal, and the errors are also listed down here. We will first read out the errors, analyze them, and decide whether we will be recording them in the control account or in the reconciliation or both. Our first error here is that total of the discount received column of 1715 was not entered in the purchase ledger control account. So in the books of prime entries, total of discount received column was taken in the cash book that had to be transferred to the purchase ledger control account but was not transferred. So obviously it will affect your control account. But will it affect any of the purchase ledger accounts? No, because the total of the discount received column is not entered anywhere in any account in the purchase ledger. On listing out, a credit balance of 205 was actually treated as a debit balance. On listing out means when they took a schedule of all the creditors' balances, a total of all the balances in the creditors' account, one of the balances had a credit of 205 but that was mistakenly taken as a debit balance of 205. Obviously, when you do this error, your balance as per the purchase ledger accounts, that is given as 19766, is incorrect now, and hence this will be recorded in the reconciliation. This error does not affect the control account in any way. Petty cash payment of 63 was not posted to the creditors or suppliers account. Again, this will be recorded in the reconciliation because there is a mistake in creditors account or in the purchase ledger, but control account is not impacted because control account is always recorded directly from the day books. Purchase ledger was overcasted by just $4. This will impact your control account. So we have two errors that will go in the control account and two that will go in the reconciliation. Let us start our updated purchase ledger control account by bringing down the balance as per the previous control account, which is 21,832. My first entry was total of discount received column 1715 not entered. So let us record our discount received in the control account 1715. And purchase journal was overcasted by 4. It means the total of the purchases in the purchase journal was taken extra by $4. When it was taken extra, we've already put that extra 4 in the control account. Now we need to reverse that, and hence purchases will go on the opposite side as 4. Let us balance our control accounts. So 21,832. We need to calculate our balance carried down, which will be the updated balance as per the purchase ledger control account. If I deduct the total of the debit from the 21,832, what I get is 20,113. Moving on to our reconciliation. Our previous balance as per the purchase ledger, that is given in the question, 19,766. We need to start with that balance and adjust the errors that were done in the creditors accounts. Second one, a credit balance of 205 was treated as a debit balance. Something that should have been treated as credit, should have been added to the list of balances, was actually treated as debit or deducted. Now you need to add this twice. First, to correct the error, and second, to actually give the effect of the $205 balance in the creditors account. So credit balance treated as debit. In the plus column, I'll have double of 205, which is 410. Petty cash payment of 63 not posted. When I post this transaction in the ledger account, That will come in the minus column. So petty cash payment in the minus column 63. No other transaction. Let us take a total. 410 for plus, 63 for minus. And the difference would be 347. So the 347 would be added to the previous balance as per the purchase ledger. And when we do that, what we get is 20,113, which is nothing but the balance as per the purchase ledger control account. When this balance as per purchase ledger is matching with your balance as per purchase ledger control account, the updated control account, it indicates or it signifies that all the errors that were earlier present in the purchase ledger accounts are now found out and have been rectified, or at least have been considered. If you enjoyed this video, please like the video, please share it with your friends. Do not forget to subscribe to the channel, press the bell icon. I will be putting up new content every week, so make sure you do not miss any lesson. All these lessons will be as per the syllabus given by the board, so it will be very useful for you. Thank you for being there. I'll see you soon.